Well, howdy, howdy. How's everyone doing? It's a fine Saturday morning. You guys hear me and see me okay? Let me know. Um, my friend Don used to, a good friend of mine, Don Burns, a solid lawyer here, best traveler I've ever met. He always would say, howdy, howdy. He's a West Texas oil man, and from years ago, and now he has become a badass trial lawyer. He and I have tried several cases together, and I always think of him because he would say howdy howdy. He's a very slow Texas drawl, you know. The only guy I know that would pick a jury in Southern California in cowboy boots. To this day, he still does that. Um, funny story, real quick before I jump in. This guy, when you bring a jury into the jury box initially, usually the judge will start asking the jury some questions. And just to get background, name, what they do, occupation, family history, things like that. And Don would sit there, he wouldn't make one note on his pad. And as soon as the judge gets done with that, he'll turn it over to counsel to ask some voir dire, some questions of the jury. And Don would remember every single name, where they were in the box, first name, what they did. The guy is insane. So anyway, by the way, I will throw it out there now. If you guys want, as part of this format, if any of you have any interest, I will every day, every live stream, share maybe one thing that happened in the law practice in the preceding week, good, bad, indifferent. Just take a couple minutes and just throw something out there. If you guys have any interest in that, let me know. Yanni's here, so he'll check out the comments for now while I jump into the topic. I did want to say one thing. You guys see, I have a conference room table here. That's my desk. And if any of you were wondering, and across from me here, I've got 4 chairs that go around the table. Years ago, I changed the format because I didn't like the fact you'd walk into, a professional's office or a lawyer's office like mine, and you would, the attorney would be at the traditional desk, right? The big wood desk, kind of, ruling over his kingdom. It was like a power play. I never really liked that. And so I thought, I'm going to bring in a conference room table as my desk because it's more collaborative. Everybody's kind of on a more conversational, equal level, clients, attorneys, whatever it is, consultants. So if you guys are wondering, this is my office, and this is my desk. It's probably about an 8-foot conference room table. All right, before we start, no legal advice being given here, no financial advice. Disclaimer is going to be in the description, okay? As you know that. Yanni is here moderating, so everyone be respectful of each other. I don't want him to have I don't want Yanni to have to put any animals back in the cage today, okay? So we had 12 shows from last week till today. So I pulled 12 comments to read, briefly discuss, and then we'll open it up for, if you guys want to, time permitting, for a question and answer, okay? So the first show that I did about a week ago was that CME meltdown, right? And it was entitled Fragile Point of Failure, CME Halts All Trading. And that related to that data center in Illinois that supposedly overheated. And yeah, there was a story later in the week I share with you. We'll address that as well, a show about JP Morgan pulling a big bond funding for that company because they were getting some heat. So no pun intended. So the comment from the show entitled Fragile Point of Failure from about 7 days ago was from Christina Politano. Christina's been watching the show for a long time. And she says, I'm calling BS on this whole thing. There was no problems with the cooling system. They have like 3 backup redundancy systems. This is bullshit. The market got too hot and they shut it down, just in my opinion. Interesting. The comments I was getting the next day was, Matt, you're so naive. There was no overheating. This is all about because silver was running that day and they wanted to curtail it getting away from them. It's interesting because with that story I saw the other day from JP Morgan pulling the funding on that big bond deal, it seems to lend some more credibility to that. But thank you, Christina, for that. Show number 2 was They Know What's Coming. Talked about China dumping $1.3 trillion of sovereign wealth fund. Excuse me. China's sovereign wealth fund dumping $1.3 trillion of private credit. And the comment I got on this was from Football Wisdom 1. And he says, I think it's a he, in my opinion, it's more likely the liquidation of treasuries is due to a liquidity squeeze and shortage, need of dollars, than it is a general move away from the US and the dollar. I could be wrong. The media's narrative about sell US is ass backwards. US is still the cleanest dirty shirt in the laundry hamper. China is fortunately a few months further down the global depression road than the US. So that's from Football Wisdom 1. I don't disagree with that premise, but the idea, I believe, of that show was that, from what I read, the story is that China was going to the secondary marketplace to sell or offload their interest in a whole bunch of private credit deals in the United States. So they were kind of getting, the way I read it, a bit panicky, a bit nervous about private credit, I think for good reason. And they were going to the secondary market, taking a haircut, by the way, on their investments to basically get out early, not waiting for redemptions, not waiting for maturity of those deals. Okay, but thanks for that comment. Third show was about the aluminum industry getting crushed, and it was entitled Another Casualty, having to do with how the shortage of aluminum production in the United States, given that the AI data centers require so much of this stuff, and how it was going to impact everything going forward, and whether they were going to have to start outsourcing it outside the US. And this was from MF-X07, okay, MF-X0. Well, whose fault is this? He says, we had capacity in the 70s through 2000. The companies to China worked supplying, he says he worked supplying for 31 years. Electric grid capacity, conflicted problem. I will also say much of the infrastructure USA had was World War II vintage. I appreciate that comment. Yeah, I think a lot of stuff was offloaded and sold to China and others outside the United States. So maybe some of that is self-inflicted. Again, I definitely I don't pretend to understand the nuances there. But it definitely is interesting. And the reality is now, it doesn't appear from the video and the story I shared on that show, that we're going to be able to keep up at all by a US supplying aluminum for the data centers. So another problem for these data centers and these hyperscalers that seem to have a lot of elephant room now, okay, from its electricity, aluminum, depreciating GPUs and chips sitting in warehouses, right? Staffing, we'll get to that one. Staffing these trades that they need construction workers and engineers, HVAC people to actually build these things out. So again, it's becoming, to me, to be a bit more pie in the sky, I think, than ever. Next show was They Will Get Slaughtered. Private credit returns are falling, yet investors keep piling money in. And my whole thought was, why? Why are they like glutton for punishment when they're chasing this? When when the returns are actually falling. The whole idea of taking the additional risk on private credit is because there's supposedly going to be higher returns. And according to the story I shared on that video, private credit returns are actually falling. So this is from Nielsen, Alhambra 341. Nielsen, Alhambra 341 says, in the 80s, I was on the board of an SBIC. He says, Google it, quasi-Fed. Third of capital in IP. He's explaining where it was allocated. Third of capital was in IP and pending patent collateralized loans. A third in convertible loans. A third shoot for moon startup equity buy-ins. Almost no losses in loans. Convertibles outperformed. 80% of equity underperformed to write down. The other 20% base hits became home runs. He says 2 home runs. Moral: without collateral, then and now, you're going to get F in majority of sounds great startups, public or private. Okay, so I appreciate Nielsen's comment there. I would just add that, you know, when my understanding is this private credit, when they're doing equity buy-ins, they're not, what I mean, it's not a traditional loan structure. If they're taking ownership, okay, through these limited partnership vehicles, there is no collateral. They're just saying they're going to, you know, get returns based upon the future success or failure of those companies. Now, a lot of it's structured like debt, okay, where there is loans and there's collateral. But in pure equity type investments, you're not looking to collateral. You don't have collateral. You're a partner, okay? So you rise and fall with the ship on that. Next show, guys, was a race to the bottom. Subprime borrowers now make up 35.8% of all, I think it was, loans. That was, you know, a bit of a shocker on those stats to me. And just a Gardner was commented and said, the lenders aren't just complicit, they're actively seeking out subprime, high interest loans, which are sold at premium into markets, the junk held by opaque funds. Like in The Big Short, the two guys who get huge bonuses for lending the riskiest loans. Why are they confessing to this practice? Question. They're not confessing, they're bragging, he says, right? Which leads to, it's a bubble, short the mortgages, except this time it's cars and credit cards. So yeah, I mean, look, I think there's no doubt that these subprime lenders know exactly what's happening. But what they do is, as long as they're able to suck the subprime interest rate and the late fees out of these struggling consumers until they have to go repo the car or whatever it is, you know, foreclose the house, tow away the fifth wheel, then they just keep playing the game, right? And of course, they're hoping to offset the losses with their prime borrowers, okay, and their higher net worth, let's say, you know, performing consumers. But thanks, Justin Gardner, for that. I certainly, I mean, look at, I've shared in the past this whole buy now, pay later, you know, scam or sham. I mean, that's exploding. You know, they have to know that these people, many of them, are never going to make payment 3, 4, and 5. Okay, they can assess all the late fees they want. It's an unsecured debt, just like credit card stuff. And when these guys run to the bankruptcy court, you know, bankruptcy court, they're going to get nothing on these obligations. All right. So yeah, you do wonder what they're thinking. And of course, the Klarnas, you know, those buy now pay, they're going and getting lines of credit from the big banks, right, to collateralize all this stuff to the subprime borrowers that are financing their pizza on a 5-pay. All right, next video was 2025 meltdown. BOJ December rate hike would force an unwind. Talks about the Bank of Japan. That's a real deal. December 9th, 6th, they're coming up here in a few days. My understanding is Bank of Japan is going to be meeting, and they're going to decide whether they're going to raise their rates. And everyone is saying that the understanding is that they're going to raise the rates. And they haven't for like 20 years, of my understanding. They've been keeping their rates close to zero bound. Right now, their 10-year yield is spiking. I'm not an expert on economics in Japan or the yield curve or the bond market, but I read that story, I shared it, and what they're saying is if their central bank does indicate more rate hikes are coming, that's going to you know, an unwind in this yen carry trade, right? Where they borrowed in yen at 0% and went and bought U.S. assets. A lot of the U.S. assets, by the way, being, my search all screwed up. A lot of those assets being private credit. Okay, and the story behind in the video I share was they don't think they're going to go and dump U.S. bonds because those are the safe play, but they're going to potentially start dumping their U.S. private credit exposure. Okay, so this is from the full dub. The full dub. The comment is, I lived in Japan in my mid-20s. It was the first time I had ever heard of the yen carry trade. As intertwined as our banking and finance is post World War II with Japan, and with the amount of government debt of ours they own, the yen has a definite effect on our finances. If the Japanese decide to start dumping bonds, own debt, etc., our bond markets will become a hotbed in a bad way. I don't disagree with that premise, but again, the point behind the article I shared is that they would probably sell U.S. bonds, U.S. Treasuries as a last resort. Okay, back to the cleanest dirty shirt in the hamper. But private credit is not is not something that would be considered top tier from my perspective. And if that starts to unwind through the U.S., that will reverberate here in our. Let's see what happens with the Bank of Japan. I believe it's December 9th. I don't know if they'll make the decision that day, if it's a multi-day meeting like we have with the Fed or not. But let's keep a watch on that. Okay, especially if you're involved in invested in the stock markets here in the United States. And maybe they'll go and I got some other comments. Maybe they'll go and dump Bitcoin and gold and other stuff. Who knows? It could be a big one unwind. It's a big sea change in Japan because they're facing a whole bunch of economic issues over there they haven't faced for like 20 years. I was reading. All right, next show was their value is evaporating, and it was BlackRock warns on the AI debt. And this was the I believe the chips. Okay. Comment there I'm going to read is Mr. Todd Delarodi. I think it's Mr. Todd, Delarodi. Think of NVIDIA as making up the value of these, think if NVIDIA is marking up the value of these chips 4 or 5 times they're using for their circular investments. What will they be worth once competitors enter the markets, which is happening faster and faster? Good point. And next year, NVIDIA has to sell below their value soon just to be competitive. How much would this hurt these companies? Think these chips are as good as gold? Question mark. There's no doubt there are going to be more competitors entering the marketplace, which probably is a good thing, not necessarily for NVIDIA's earnings or their stock price, right? But you're going to see that, and that will probably, have some impact on the value. Of course, while these companies have been hoarding these things, waiting for the AI data centers to be built out so they can implement them and actually use them. All right, next show. Thank you, Todd, for that comment. Next show was it's looking. U.S. lost 32,000 private jobs in November. This is from Amy. Amy HS1QE says, my brother, an investment banker with an MBA, was laid off and has been out of work for over 2 years. His new full-time job this entire time is trying to find a job. My neighbor's son graduated 2 years ago with an engineering degree. Despite hundreds of resumes sent, he's working at the local supermarket. So if that isn't a snapshot of what I think that probably millions across the country are actually experiencing right now, as we have the jobs market in kind of a free fall scenario. If you watch mainstream media, they'll tell you it's all fine. If you watch some other stuff, they lay out a pretty compelling argument. Look, private jobs, 32,000 were lost just, I believe, last month. So they're hurting. The larger companies still aren't pulling back as quickly, but from my perspective, let me know what you guys think, that is coming. Okay, next show is Pipe Dream Money Can't Buy. The skilled trade workers needed to build these AI data centers. And the comment I received there, it's a long one, but I want to read it to you from William Carlson. William Carlson says, I've spent 40 years in large-scale construction management. So I would like to point out that each data center has limited work for each trade. For example, for civil and grading, it may be 3 months of work. For electricians, it may be at most 6 to 9 months of work. Your article makes it sound as if there will be nothing but construction of data centers forever and ever. I can pledge that is a pipe dream. I can tell you, unless the entire country is hot in construction, that if the country falls into a recession, the construction trades are the first to suffer. If the AI industry crashes and burns, everyone loses. Remember, the purpose of AI is to take over jobs. So that's from William Carlson. But in order for AI to take over jobs, I would say they have to have the AI, at least the data centers that are going to perform supposedly some of these tasks. They have to have them actually up and running. They have to have them powered. They have to have them with, sufficient materials. I think that remains to be seen, but I don't disagree. Right? Look what happened in 2008 when the housing market crashed. Construction guys, developers, construction guys, that they couldn't get work fast. I was heavily involved in construction litigation work back in that whole multi-year period, '06 to 2010 or 11. And those guys went from, hero to zero really overnight. They had massive companies, framers, electricians, all that. So I agree with what he's saying here, what Mr. Carlson's saying from that perspective. When things do turn down, those are the first jobs to get hit. So look, I mean, maybe it's a blessing in disguise. Maybe if these hyperscalers can keep the demand in place for all these tradespeople for longer than otherwise might be the case, maybe that's a good thing. I wasn't giving an opinion. I was just saying that I think it's somewhat, say maybe not totally rational for these metas and such to think they're going to have, let's say, labor on demand, specialty labor that doesn't exist right now. And it takes years to get trained through those apprenticeship programs and the like. Okay. And even the programs don't exist right now. They can't even find enough instructors, I don't think, to create those and teach those and let's say train these people. So anyway, thanks for the comment, Mr. Carlson, on that. Next video was big banks want out. Big banks want out. Morgan Stanley wants to dump $27 billion of debt. Another, I thought, very interesting and scary topic. It's how they're doing this, and they're dumping, their debt through these vehicles into unsuspecting, investment pools, private wealth funds, private individuals that basically allow them to kind of skate and they absolve themselves of the risk, and they're going to be the bag holders or these intermediaries again. So Ford Reynolds comment. Ford Reynolds says, why has private credit such a problem? Well, the banks, through government legislative changes, did not make it in the bank's interest to lend to small businesses, which are the backbone of the country. That is one reason you are selling large layoffs in small businesses. So private credit tried to step in to the shoes of providing for small businesses, but taxes, inflation, etc. have killed the ability of small business to operate profitably, and private credit now is holding the bag so many exposure to small businesses. I agree with a lot of what Ford's saying here in terms of how small business has gotten strangled, okay, by regulation, by taxes, all those kind of things, and a struggling consumer not buying, the stuff they're making. But to say that private credit stepped in to kind of solve the problem because the banks were lending to small business, I don't know. I don't know if I agree with that premise or not. Obviously, private credit has provided or tries to provide, capital to some startups. Okay, some of these zombie companies, but it's because the banks. And I agree with what Ford's saying. The banks have shifted away. They want to do the big deals, right? They don't want they want to push off the smaller unknowns to the private credit investors. So thanks for that comment. Next one was CME silver plot thickens. This ties back to the meltdown, right, of the data center in Illinois over a week ago, and this is Goldman Sachs halt a $1.3 billion bond sale that they had set up for that company, Cirrus One, I believe it was, that basically was responsible for the ownership and operation of that data center. I believe, if I'm not incorrect about recalling what that story said, is that KKR and Company, right, one of the global leaders in private credit in terms of assets, they own, I believe, Cirrus One. So StratFan STL says, first, the level of redundancy that should be present in this type of data center is such that any one failure of one thing should never trigger a failure of the entire data center. The fan reference is worthless without context. The fan inside a single server chassis, ? Those fail all the time, and the server has thermal protection that will trigger a shutdown. A fan in a single rack pulling air up and out into the aisle or dedicated exhaust, ? Again, no way. Losing even a single power distribution unit, a PDU, should never lead to the entire floor reaching temperature. Either they lost the entire air handling control system, or they're just lying about some other non-equipment issue. So that's a detailed comment. Seems like Strat fan has some background here. Again, were these air cooled or were they liquid cooled? I mean, he's talking about air cooled stuff, but in terms of redundancy, just like Christina said, I think in that first comment, you would think they would have some redundancy in place. So again, going back, leading to some credibility that, or some credence to the whole story that there was something else behind it. Okay, so thank you, Strat fan, for that comment. The last one we did, the 12th video of the week, I think yesterday. They're coming for JP Morgan. Tricolor investors seeking financial records. So that was, I thought, a pretty interesting story, because the Tricolor investors that are stuck holding the bag in the Tricolor bankruptcy are letting it go. They're asking the bankruptcy judge for an order that they can dig into JP Morgan's finances and records and find out what JP Morgan knew about the collateral or lack thereof, or some of that double pledge collateral, and what conflicts of interest they had inside. So yeah, I get it. You know, the comment from James Morgan here, excuse me, J McCann, J and then MCGANN, J McCann 6637. They will not go after the big banks. You're dreaming. With the GQP running things, the government is in collusion. The Fed will keep pumping in money until they can't do it anymore. When this blows up, it will make 2008 look like a Sunday school picnic. I agree with that last statement for sure. And I wasn't suggesting that that the big banks, this would cause a downfall of JP Morgan. I think my point I was trying to get across after sharing the story was more that this is the kind of stuff that starts to break confidence, right? With, let's say, investors on a more grand scale in this private credit stuff, right? And once the creditors across the spectrum, or the investors, if you will, start to get spooked and start pulling a blue owl, right, and making more demand for redemptions and asking for their funds to be returned, that's when you start to see this unwind. Okay, so there's whole different things that can cause it. Is Jamie Dimon going to be intimidated by sitting for a deposition in the Tricolor bankruptcy, right? If it ever gets that far, I highly doubt it. Is it going to cause JP Morgan to fail? Of course not. But it's causing uncertainty and people to ask questions. Now you're going to get law firms around the country putting together these plaintiffs groups, okay, as these private credit deals blow up, and they're going to go after the big banks, okay, especially if this judge in Texas starts to set some precedent on that Rule 2004 order, okay, that allows this extra discovery. So that's the comments from 12 videos. How long have we been going? Any half an hour, 28 minutes? Yeah. Appreciate you guys. 12 of you on the line. So if you guys want, we can field some questions. If I can read them here on my screen, throw some stuff out. Obviously, I can't jump into specifics on legal advice and stuff, but favorite asset class. I have several. I mean, real estate obviously is. I think real estate, hard assets, gold, silver. I am in cryptocurrency as well. Some stock market stuff. I just right now, I look at. I've left gains on the table for sure over the years, being pessimistic about that. So I get it. You make the calls that you feel are important to make. But I like hard assets. Warning signs. Chesapeake Bay Bridge had an accident a few months ago. People in Baltimore will be trapped on their way to the Eastern Shore. Yeah, I remember reading about that. Cheers from Canada. What do you think of the PC inflation data paired with anticipated rate cuts? Yeah, that's kind of beyond my pay grade. I don't know what to think of that. I mean, I think that the reality is it's going to support, if I understand it correctly, what the data was yesterday. Is that it came out, was it tamer than they thought? And that would, of course, give the Fed, I think, from a layperson perspective, more fuel to keep the pedal to the metal with rate cuts, because the job market's not improving. Those numbers were worse. So that's going to support, I think, more liquidity in the system, and more blowing the bubble even larger. Yeah, the Fed will cut. I think for sure the Fed's going to cut in December. Don't forget, about 2 weeks ago, markets got all spooked because they were thinking that the next rate cut was off the table. And I think that's come full circle now. And so the markets are going to keep probably, getting juiced here. What else here? Skeptical 59 says gold, silver, brass, and lead. No argument there. Between here and there, says BOJ will hike, ? Don't know if we talked about the yen carry just got here. Yeah, we did. I think, look, from what I'm seeing, it's like an 80% chance, at least a few days ago, 80% chance, at least I believe that that they're saying that BOJ will increase the rates. And if they increase the rates and they are dovish, saying that further, and they're hawkish, meaning they're going to get further increases to offset these economic conditions that are entering their economy, you could have an unwind in that yen carry trade for sure. Okay, because at some point there's no benefit then if they can't get the yen at 0% anymore, and then take the risk in the U.S. markets reaching for yield. Why would they? Okay, and actually, if there's some panic for liquidity, they'll start selling stuff. And will they sell U.S. Treasuries first? I would say probably not, because they sell cryptocurrencies, metals, private credit investments. Sure, for sure. U.S. will cut, Canada will pause for now. Schedule 59. Okay. Yeah, I don't know much about the Canada economy. I don't follow that. U.S. I think is going to cut from my perspective. John Harper, thanks, Ox. Another good show. I appreciate it, John. Thank you for tuning in. Web Forge, I thanks. We all are behind the curve. Everything is moving too fast to keep up. It's funny. I don't intend to do really more than one show a day. It's been more than that recently because things are kind of happening so quickly. And so I'm trying to get stuff out there for you guys. Football Wisdom, were you here? I shared your comment. You're located in Southern California, desert area. We are getting pretty nice temperatures here. Where are you guys at and around the country? We're getting like mid 70s right now. Very, very, it's like spring weather. It was cold last week for us, but Henry Morgan says there's a great article posted by Bill Holter on the Japanese bond market, possible coming troubles. You know what? I'm going to pull that. I don't know if you guys saw years ago, like 3 years or something. Jeremiah, Babe and I did a show with Aaron, and we actually interviewed Bill Holter down there in Texas. And we got to talk to him about some really interesting topics. He is a to the core silver, staunch precious metals, physical precious metals supporter, but I've been following him for years. Really straight shooter, no ego, really good guy. What else we got here, guys? Feelings on the SEC shelving the equity short sale reporting rules. That's from MBGC. I saw that. I was going to share that, and I didn't think most of you guys would enjoy hearing about it, so I didn't delve into it. But yeah, it's anything that could curtail or rein in, potential, abusive behavior they don't want to do, right? I mean, I just glanced at it briefly, so I'm sorry. I should pull that back up and consider covering that. So don't have all the facts on it. Mark Phillips says, loved to KKR interview. Will the SEC help or hurt? Well, you guys, I shared a story about 2 weeks ago on the channel about the SEC is considering relaxing the rules on the big four accounting firms relative to, right now, I think as I understand it, they cannot audit at the same time consult. They can't wear both those hats. The SEC is considering, of course, at the huge lobby of the big four accounting firms, relaxing those rules as opposed to private credit. And so if we start seeing that, they're definitely, well, some might say they're helping, some might say they're hurting. I don't know. It depends on what your perspective is. My perspective is that would be a bad thing. Okay. SEC won't do anything. Well, if they won't do anything, they might do more to look the other way, meaning relax those requirements on the accounting firms. Henry says SEC is the banks watching the banks. A joke. Well, yeah, it's a little bit of the is it the fox and hen house? Is that the fox and hen house? Where they they say that look, they can't do both. Okay. How we doing here, guys? 122 in the room, so we'll keep going for a while. Football wisdom in August 2024, Yen Carey trade scare is an indication we could be in for a huge surprise this week and worth further attention research. I think this is a big deal on the BOJ. That's why I covered it. It's going to happen in a few days here on the 9th. I don't know if you guys know, do they make their decision on the 9th or do they have a multi-day meeting at the Bank of Japan? Or is it going to be the 9th where they announce it? Because again, if the minute after, if there's some panic, you're just going to see massive waterfall events possibly. Again, I'm not spreading panic. I'm not spreading doom and gloom. I don't know what the impact could be. There's some out there saying it's a non-issue. Roger, how's the hood business doing? Actually, it's doing really well. Thanks for remembering and asking about that. We're getting some traction. It's one of those things where it's government mandated that these hoods have got to be cleaned every so often. It depends on what the town is, but at least twice a year, sometimes 4 times a year. So the health department, they don't do it. Football was in December 18th and 19th. I thought it was the 9th. Okay, I thought it was the 9th. Maybe I'm confusing it with the U.S. Fed. Anyway, clarify that for me if you guys don't mind. We have the U.S. and we also have back in Japan. But yeah, hood business, it's like anything else. You got to get out there, get into competition. Let the product speak for itself. But things are going. WebForge, what triggers the crash will be stock market or bond market or labor market? Well, the bond market's a whole lot larger than the stock market, right? So, FOMC is December 9th and 10th. BOJ, okay. Thank you, guys. FOMC, okay, the Fed's December 9th and 10th. BOJ is 18th and 19th. So BOJ is going to be just before Christmas time. So anyway, both events I think are important to watch. My take is that the Fed, the U.S. Fed will cut another quarter point, and Bank of Japan, who knows? General thesis for the markets in 2026. I wish I did. I think we're all just kind of throwing darts at the board, but I really believe that's why I'm covering it on this channel a lot more than I have recently. Excuse me, a lot more than I was before, because we're seeing a lot more unfold as private credit. U.S. cuts, according to I agree. U.S. cuts and BOJ hikes. So that'll be good for the U.S. Maybe that'll offset some of this. Okay, because cutting rates is to be taken as a positive thing for the markets. But will the Bank of Japan event a week later be too overwhelming, and will that put our rate cut in the shadows and cause some kind of a reaction? I don't know. You guys, it's anybody's guess. I'm just a layperson here looking at these tea leaves like many of you guys are, scratching my head. What else we got? Toby says Fed funds rate will continue to decrease while 10-year yield increases and mortgage rates increase. It's an interesting thesis. I've seen a bunch. I think I covered it on a show a few weeks ago. They're saying that it's definitely not a foregone conclusion that a reduction in the Fed funds rate will have a reduction in the mortgage rates. It could actually go the other way on mortgages. So again, that's a bit beyond my pay grade, but Toby makes a good point. But I do think I think the point of the story I shared weeks ago was that all the developers, right, and the big house builders, in the country are coming out saying, well, rates are going to come down, so it's going to have a corresponding, let's say, impact on the mortgage rates. And yeah, that's not borne out yet, I don't believe. Okay. And look, in any event, the mortgage rates are not going to come down to where they were from my perspective, 3 years ago, 4 years ago, everybody locked in at 2.5, 2.75, 3%. That's a dream. Okay. So these young couples, young families coming out, now trying to buy a house with these inflated prices, even at a 5.5% mortgage, right? 5%, right? 4.5%, which is still a big drop from here. Not going to happen. They can't afford it. They can't afford it. They're trying to balance student loan debt, credit card debt, everything else. Henry Morgan's Law, dark clouds on the horizon, prepare. I try to just lay it out there in terms of facts based as opposed to just saying prepare, prepare, prepare. I think that goes without saying, just be smart about stuff, but you have to keep living. You gotta, be, in society, you gotta have some money in the bank to pay bills. You can't just run and duck into, a bunker from my perspective. But yeah, there's a lot of things out there. And, and in great times, it's easy to let things run up. But it seems to me the cycle in all of this stuff is starting to come full circle, and we're going to be going into a period of a downturn. Again, I don't have a crystal ball. It's not financial advice. I don't know. Chris says, I've heard some people say that Bitcoin is a leading indicator as to what the stock market might do. I find it interesting that Bitcoin can't seem to hold the gains despite stock market going up. Yeah, I think what's happening there, again, leave me your thoughts on this. Roger, the average age for a first-time home buyer in the U.S. is now a record 40 years old, up from 33. Yeah, and even the 40-year-olds can't afford it. But the point about Bitcoin, I think what you have is you've got some of the old guard selling off. They're still way up, even in the $80,000, $900,000 range. Some of that's not the main reason for it. You also have the confidence being shaken, in a lot of, the consumers, small investors, things of that nature. That the big investors, right? The BlackRocks and institutional money guys. We'll hear it. It'll come out. They're buying the stuff up. As it gets sold, it's getting bought up. Okay, the weak hands to strong hands. Same thing with gold and silver. Same thing with Bitcoin. Anybody who's selling their Bitcoin now because it's at $89,000, when you have the administration and the Trumps coming out saying, look at, now granted, they're talking their book there. They own a lot of this stuff. But these are the powers that be, and these are the ones that are going to have, influence on the new rules and regulations. So it is what it is. I think that you're getting weak hands shaken out. And you think BlackRock's not in there scooping it up? Of course they are. Of course they are. They would love to have your Bitcoin. I don't know. Again, Football Wisdom says the MicroStrategy has to sell big time if we get to the low 70s. I don't know. I saw Saylor come out and say that that's not the case. Didn't they recently put in place a big cash reserve to pay out dividends on some of their stuff, some of their preferred dividends? So I think Saylor's been out saying it can go a lot lower than that before they would have any issues, before they start having to sell Bitcoin. But again, not an expert on it. Okay. John Harper, appreciate your opinions on Bitcoin. Yeah, again, that's just one person's perspective, and it's like anything else. It's now manipulated like anything else, okay? You have a lot of, people lining up against it short. And so, it become these certain points. Travis talks about this a lot more. He's way more knowledgeable on the crypto stuff than I am, in terms of where these sell walls are put in, right? And it is what it is. You just gotta not play the game, but understand the game and use your judgment accordingly. But I think gold and silver have a bright future, just going up, right? As the dollar gets weaker, as the rates keep getting cut further, I think gold and silver has no place to go than up. Again, not financial advice. I think that cryptocurrencies are seeing a bit of a lull here now, but in the medium long term, it's where it's heading. Whether you like it or not, agree with it or not, and want to participate or not, obviously is up to you. That's true. MB says the minute it entered the equities trading venue, BTC became manipulated by the big players, for sure. But they manipulate it for themselves. Okay, as they're out there saying it's, hey, this is looking bad. Michael Saylor's in trouble. Sell, sell, sell. You know, and all the small investors with their zero point 0.2 Bitcoin or 0.001 Bitcoin go and dump it on Coinbase. Guess who's buying it up? The same people that are telling you that it's in trouble, right? So just keep that in mind. It happens with everything. Well, we were going 45 minutes, guys. When I was talking to Yanni, I said maybe 45 minutes is the sweet spot. We had 120 people, hanging around. If you guys want to throw a few more questions my way, otherwise we'll cut it for today. And I do appreciate if you guys like this format. Let us know too. This will convert to a regular video and post here shortly after we conclude the live stream. So leave me your thoughts on Spike. Thank you. I appreciate you being here. Yep, football wisdom. Thanks. Rob Norwood. Thanks, Matt and Yanni. So lots of events coming up here right before Christmas. We have Fed meeting here quickly. I guess in a couple of days. You'll still probably. What do you guys say? You guys see the stock market go up this next week after the Fed announces another rate cut, or is it already baked in? What do you think? Roger Smith, good one, Matt. Thanks, Roger. Appreciate you being here. Well, it'll be a Merry Christmas. LOL. Skeptical. Well, look, unfortunately, not to go back down the doom and gloom road, for many, it's not. I mean, just because they're struggling financially. And I think even for the people that have health and have family around them, when they can't really pay their bills or keep their lights on or make their car payment, that bleeds over into their level of, or their ability to enjoy Christmas, enjoy the holidays, enjoy family. Unfortunately, so I don't know, but I guess as long as they have credit cards and they've got Klarna and Affirm, maybe it will be a good Christmas. I know that sounds as sarcastic, I guess intentionally, but there's just a huge divide, obviously, between the haves and have-nots right here, right now going on, and it's only going to keep getting worse. What we're seeing. Annette says, starting to watch your videos. Appreciate your wisdom. Thank you. I appreciate you watching. Yeah, guys, and I think Yanni's made this point. Share this stuff with people, not just spread around family and friends. A lot of my family and friends would, they don't want to hear, they don't want to watch it. Okay, it's too much reality for them. Someone commented the other day on my videos and said, all you're doing is out spreading doom and gloom. And my response was, well, what you call doom and gloom, I call facts, right? I call data, I call evidence. Okay, if A plus B doesn't equal C, I try not to share it. Or if I'm sharing something that really is just out there or just speculation or pure speculation, I'll say that. And we can all once in a while indulge in speculation on whatever the topic is. Nothing wrong with that. Sometimes it just kind of generates discussion and food for thought. But the stuff I'm sharing with you on this show every day, for the most part, is I'm reading you stories, articles, out of, you might question the sources, but that's what's out there. Okay. And this private credit, never again, says not doom and gloom. I'm grateful. Thanks. Yeah, and neutral. Yeah, it really is kind of about that. And I don't try to come out here and say you have to go buy this, otherwise you're going to not survive, or you have to do things this way. Everyone's got their own way of providing for themselves and their family, and including their preps, their preparedness, right? Depends on where you're at and what your financial ability is, and what's important, what your priorities are. But there are some things, obviously, right now, looking at everything as a whole, that make more sense to invest in than not. If you have money to invest, if you have some freed up dollars to do that. Many people, again, are just struggling to keep the utilities paid and keep their car payments made. So learning is the key. Skeptical 59. Yeah, I mean, hopefully we're always all learning, and that's why I enjoy doing these videos. Some of it's from a selfish perspective, because I'm learning as well. When I read this stuff, I'm like, holy cow, you got to be kidding me. How can this even be? And then I feel like I got to get over here and get the video up to share it with you guys. So it is learning, And that's one thing that I really enjoy about this channel is that it's keeping me sharper too, because Shielded Prepper, Jesse's in the house. How you doing, my friend? Yes, I know. So you haven't closed the escrow yet. Okay. I hope that's going to happen, my friend. You're going to get that thing done, and I'm so proud of you with that. So if you guys don't know, Jesse actually is the YouTuber. Check out his channel, The Shielded Prepper. Jesse is the guy that I met at the Silver Convention in Las Vegas. We were both out there a few years ago, or a couple years ago, I guess now, and March. Okay, and Jesse said, start a channel. He was the one that kept saying, even just start somewhere, put up some stuff. If these people would like, share your legal perspective on things. So I do credit actually to this day, Jesse over right now. Where are you? You're in? What state are you in again, Jesse? Where's the park? It's not Wisconsin, is it? No. So anyway, yeah, he's we were there together, and I really listened to what he said. And on the way back, driving back from Vegas, after spending a few days hanging around Jesse and Travis and those guys, I decided to launch the channel. And I'm glad not a day goes by where I regret that. It does take time. It takes being consistent, I think, to develop an audience of people that want to hear what you have to say. But I don't look back. Good call, Jesse. Yeah, Jesse's the man. So it does. I don't regret at all doing it. So I do appreciate all of you guys who are here. I would love to start seeing, converting some of these viewers to subscribers. Obviously the subscriber thing is more of, I guess it's more of a vanity thing for some people, but you see these channels with, 1 million subscribers, 500,000 subscribers, and they have 1,000 views in their videos. So I still don't understand how that happens in the real world. But anyway, all of you guys mean a lot. And if you're subscribed, cool. If you just want to tune in and watch the videos and not subscribe, okay, that's cool. But I do appreciate the support and you guys being here. I'll cut it off today. We're at 52 minutes. All right. And Oklahoma. Okay, Jesse's in Oklahoma. Sorry, man. I just blanked out on that. You're gonna close that escrow. I'm proud of you. I appreciate everybody. I'll be back. Regular shows. I have 2 topics tomorrow. I know it's a Sunday, but I've already got 2 in my mind, and I'm going to cover with you. One's about whether or not we could ever have a repeat of 1929 again. There was an op-ed over in New York Times, I guess not too long ago. There's an opinion piece out that said, well, with what we have in the system now and the safeguards, we could never have another 1929 like that again. And then the next story is about that I'm going to show you tomorrow. Is about these your retirement funds being wrapped up in these private credit vehicles, and you don't even know about it. Okay, we're talking about pension funds investing, but this article really drills down in a much more detailed fashion. So tune in tomorrow. We'll have 2 shows up. I think I try to stagger them a few hours apart so you guys can have a chance to digest them and not, I don't want to saturate, okay, but these things are important. So thanks for all of you being here. If I missed your comment or didn't acknowledge you, I apologize. My old 55-year-old eyes are seeing this stuff scrolling by, and so I don't always catch every one of you. But it's important that you're here so everyone else sees who's in the community and exchanging ideas. So to the 91 of you, thanks, okay. And with that being said, we'll stop it here, and we're back next Saturday, okay, with the same format again. All right. Talk to y'all soon. Bye.